Let's take a look at the trading week ahead. I'm Jill Malandrino for The Street in New York, along with Mike Khouw, and together we bring you what to watch. And it's going to be a busy week for traders as we really start to kick in with the earnings season. In addition, we have a lot to look at on the economic calendar as well. Of course, we have Greece and China, the continuing saga that we have to contend with. Janet Yellen delivers her semi-annual report to the Senate Banking Committee, which takes place on Wednesday and Thursday. In addition, we have retail sales, housing starts, and a slew of manufacturing data. But you know what? It's going to be all about earnings. And the first stock that we'll take a look at is Johnson & Johnson, a position we initiated in Action Alerts Plus this week.
So Johnson & Johnson is, I don't know how else to describe it. The stock is cheap, right? So it is cheap to its U.S. big pharma peers. It's cheap even to the European big pharma peers, which is interesting because in general, those names are actually cheaper than the U.S. ones. And it's cheap to its historical averages. On almost every metric, probably 25% cheap to where we would likely be trading. The primary reason for that is pipeline related, right? So everybody has concerns about pipeline. I think the important thing to remember about this stock is they get about 43% of their revenues from pharmaceutical sales. The rest is medical device and consumer. Probably 53% of their pre-tax net income comes from pharma. They have been doing more in-licensing deals, though, than some of their big competition. And I think that really is what should give people some comfort. If you think about where consumer names and medical device businesses are trading in terms of multiples, and this one's trading about 15 times next 12-month earnings, by the way, those names are going to be trading at a significant premium to that. At its worst, Pfizer was probably trading about 10, 11 times, right? So the way I see it, there's actually relatively little downside here, even facing the fact that their drug pipeline might not necessarily be the best. And it's certainly not the worst. So, I look at this and I think, yeah, this is probably an attractive time to pick it up. Things are always darkest before they're on.
Moving along to financial, Wells Fargo, and that seems to be the darling of the financial space. It seems as if it's in everyone's portfolio. You have the diversified business mix, and it really does have the highest net margins among peer because they have that really significant retail deposit base.
Well, that I think is great. I think the other thing about it is that if you had to pick between the big banks and say, okay, what are the two marquee names? JP Morgan is one and Wells Fargo is the other. The problem is that JP Morgan just comes with so much hair on it, right? And Jamie Dimon, good as a CEO as he is, he seems to be very good at painting a target on his back because he just cannot help himself twisting the knife or, basically putting a thumb in the eye of politicians here and there. And you can't help but think that every single time they pay a big fine that this isn't helping your cause. Wells Fargo, flying below the radar. They obviously have the retail presence. If anybody's going to benefit from broader net interest margins, they're it with that consumer presence. So I think there's a lot of reasons to like this. It's interesting, too, because going into earnings, so JP Morgan and Wells Fargo both report on the same day. Both of them actually are not implying very big moves. So these are places where if you were inclined to think that, hey, maybe we could get some good news out of this and that would be a reason to buy it, I wouldn't hesitate at this point.
Google's another one, too, that's interesting that's not implying a big move. And the Action Alerts Plus team here, they believe it's due for a breakout, that the price target's at $650. They're gaining global ad revenue and also market share. And they have such huge resources as well. And the ecosystem is almost becoming like an Apple where it's encompassing everything. If you're involved with the Google products, you kind of have to be there.
Yeah, this is another interesting case, of course, because the stock, obviously over the past several months, compared to the market and compared to other, sort of tech darlings, has obviously been weak. I think that does present a bit of an opportunity. I'm a little bit concerned simply because I would like to see them broaden out in terms of where the largest portion of their revenue comes from just search. But look, at the end of the day, as you point out, they have about as large an ecosystem as Apple does. That represents an enormous opportunity. We keep talking about the possibility that they might do an acquisition of something like Twitter. I mean, everybody in Sun Valley was talking about it. I've continued to believe that that's a good idea, probably for both companies. I think it's kind of unlikely, my recommendations notwithstanding. But it's very interesting because this stock usually moves around earnings and the market's not implying a whole lot. So I think actually options might be a good way to make a play in it.
The last position we're looking at in Action Alerts Plus is Honeywell. This is a tricky one here because the chart is not the prettiest chart out there. The balance sheet has been an issue, but I think investors might be missing what's happening on the organic growth side.
Well, so this is one of those interesting situations, right? Because if you're looking to get involved in a name that looks as weak as Honeywell does, and frankly, it's clear the street doesn't like it, right? So this is going to have to make a break for it one way or the other. The Action Alerts Plus guys have gotten into the equity. My way to play this, I think, because I don't see any support in the stock until about 92 bucks, would probably be to say, okay, fine, own the stock if you would like. Maybe we look for a way to hedge it, and I think that's probably what we're going to be doing sometime soon in options, going into this coming week.
All right, thanks very much, Mike. For The Street in New York, I'm Jill Malandrino.